If you have a bunch of different student loan debts and you're thinking about consolidating, you need to watch this video. I'm gonna tell you the things I've learned since I consolidated all my different student loan debts. Hey guys, what's up? Welcome back to my channel. My name's Brad. I make videos with tips and motivation on how to get out of debt, as well as my journey through the baby steps and my path to financial freedom. Today is a tip for you. A little bit of a backstory. I went to 7 different colleges before I finished off with my 2 degrees. I went to community colleges, I went to state colleges, I went to private colleges, I moved. I had student loan debts all over the place. And when I finally entered adulthood after receiving my master's, I realized that I could hugely benefit from consolidating all of my debt. And this was way before I learned about the baby steps. I knew about simple interest, and some of those loans I took for college were small private loans with interest in excess of 16, 17% sometimes. And I knew this was gonna be easier said than done, so I reached out to a couple friends and I did a little bit of research. And I learned about this company that was brand new to the scene called SoFi. Now, if you're not sure who SoFi is, they're kind of like, they've evolved over time, and they now do everything from student loans to student loan refinancing to money management to mortgages. They do everything. But when I got on board with them, they were a super small company, and they started with a group of people that wanted to help people in their own school. They wanted to create a money account where they could give students in their own program at their own college the opportunity to go to school cheaper. And this for me sounded like an incredible thing that they were doing. Now, a buddy said that I should try them, and he had tried them as well, but their standards for acceptance were really, really high. Meaning, they didn't just consolidate anyone's debt. You needed to fit a very, very, very specific criteria for them to accept you. I don't remember all the criteria off the top of my head, but I know that there was things like you had to have a master's degree, you had to be at your current position for more than 5 years, and you needed to own a home. I had those, so I went ahead and I applied to SoFi. Now, when I went to apply to SoFi, this is the first time that I wish I had a little bit more education, and this is what I'm here to tell you. They gave me a list of different refi options. One included having a variable rate and one including a fixed rate. Take a look at the 2 different things. First, the variable rate. The variable rate looks awesome. For the variable rate, you can look down and see that there's interest as low as 4.86%, and it ranges all the way down to 6.25% depending on what you want your monthly payment to be. On the flip side, if we look at the fixed rate, the lowest you can go is 5%, and that goes all the way up to 6%. So you might get yourself caught in a trap right off the bat of just looking at the variable interest rate versus the fixed interest rate and how the variable interest rate assumes to be lower. This was the first mistake I made. Before I even looked at the payment, I said to myself, all the variable rates are lower. So I'm not even going to consider a fixed rate. Big mistake. The way I thought of it was, how much could the interest really go up every single month? And even if it went up a little bit and a little bit every month, what was gonna be the big deal? Well, over the course of 2 years, a little bit has built up to a lot. Here is the most recent email that I got from SoFi, which you will receive every single month if you do a variable rate. This email every single month on the 2nd of every single month makes my blood boil. There is nothing I hate more than this email. Bradley, we are writing to notify you that your variable interest rate on your SoFi loan has changed because of the 1-month LIBOR index that has changed. This is common and typically changes your rate a small amount once per month. Your new rate is 7.175%. And they'll tell you, oh, sometimes it goes up, sometimes it goes down. It has never, ever gone down in the 3 years that I've had them. My interest rate with them 2 years ago started under 5%. I think it was somewhere in that 4.8% interest rate. And over the last 2 years, it's climbed from 4.8 to 7.1%. So tip number 1, under zero circumstance, go with a variable interest rate for anything. That goes for mortgages, that goes for car loans. Anytime you are going to borrow money and make stupid decisions to borrow money. Don't make another stupid decision by getting a variable rate. I beg you, please. It is out of your control, and there is nothing you're going to be able to do about that interest rate once you sign that paperwork. Next, if you've refinanced in the past, like I have, that does not mean that you can't refinance again. I just learned this tip this week. What happened, and here's the beauty of the debt snowball. When I consolidated my debt, I was in the how much can I afford frame of mind. So when I looked at those certain variable interest rates and I looked at the payments, I said, well, I have this debt and that debt and this debt. I'm going to drop my interest rate as low as I can, but still be able to afford that payment. If we look at my most recent debt snowball, I was able at the time to afford a payment of $750.76 for Tara's, and I was able to afford about $1,000 for mine. And I continued on that route for the last 2 years because that's what I could afford. But then something hit me after I paid off my truck this month. I realized that I had snowball money that I was applying, that if I refinanced my student loan debts, I could afford a higher payment with that snowball money and in turn lower my interest rate. So what I did last week is I refied my refi with SoFi. There's a lot of fi's in there. And what I did is I took the opportunity to get a fixed rate and I saved 2% on my interest. I just knocked 2% off. Yes, my payments went up, but I saved 2%. So let me show you right now what my new debt snowball is going to look like moving forward. We can see, like I said just a second ago, every single month, I have to pay $3,586 towards my debts. And that used to be my credit cards, my undergrad, and my truck. But now, with my increased payments, I did mine and Tara's, we refinanced them. Tara's payment is going to jump from $750 up to $1,002, and mine is going to jump from $996 up to $1,296. So now our student loan payments are going to be $2,298. But because I have all of the snowballed money from my credit cards, I'm still a lot less than what I was paying of $3,586. So I still have $1,288 to apply to my lowest debt on my snowball, which is Tara's payment. Although I've increased Tara's student loan minimum payment up to $1,000, she and her payment is still going to get the snowball $1,288 on top of that. So Tara's new student loan payment is going to be $2,290. My new payment is going to be $1,296. And we can see when we take those two payments together, I'm right back where I was at that $3,586. I know that was a lot and there was a lot going on there, but let me just kind of wrap that up. What I did is I refinanced to lower both of our interest rates by 2%. What that did is it raised my minimum payment. But with that raise in minimum payment, I was still less than my snowball overall payment. And I still had snowball money to apply to my smallest debt. So SoFi thinks that they're getting the win because they're getting a larger payment. But I get the win because I was going to pay that anyway, but now I'm paying it with 2% less interest. Guys, this whole process of refinancing, I don't think of it as debt consolidation because I didn't take lots of debts. I did the first time when I refinanced and consolidated all my debt. But I think the moral of the story here is, number one, do your research. I thought I knew what was best for me, and I didn't even, until I did the math, I was like, holy cow. All right. And use the community. I would have never even got to SoFi if I didn't ask questions. I think they're a great company, and I've been upset with them, mostly with those emails, but that was my own fault for not doing the research. If you have any questions about all my refinancing and how the hell I went to 7 different colleges, please drop a comment below and just ask. All right. We are here for one another. I hope that this helped you. And if you are going to use SoFi, I'll leave a link down in the description below. Just click on that link, help me out. You know, I maybe refer you over and maybe it works for you if you meet their requirements. Like I said, a great company if you do what's best for you and not what's best for them. Until I see you on the next video, guys, have yourselves a great day.